Hi guys, it's Doc Harry, and we have some big economic news coming out on Friday that could really move the markets. We also have a major catalyst coming up early next week that you need to get prepared for, and I also have an update for you on earnings. So let's get into it. Here's what could move the stock market over the next few days. Starting with earnings, Lululemon shares fell after the company offered weak holiday quarter guidance. Lululemon shares were down over 7% after the close. And this is a story that we've heard over and over and over again this quarter with earnings, is that while companies continue to beat the extremely low earnings expectations for Q3, they continue to provide very weak guidance going into Q4, pointing to a lot of consumers slowing down their spending, which in turn is hurting company profits. And unfortunately, the M&A or merger and acquisition segment of the market is not doing very well either. The Federal Trade Commission is suing to block Microsoft's acquisition of Activision Blizzard. The fact that this deal might not go through caused Activision shares to drop a little bit, and it also caused Microsoft shares to rise a little bit. The reason Microsoft shares rose is because if the deal does not go through, then Microsoft will not have to deal out a huge amount of money in order to buy Activision Blizzard. And as a result of that, it will be better for Microsoft's cash flow and cash on hand. And that's why Microsoft shares rose a little bit on Wednesday. Now moving on to the overall economy and how this could affect the markets. Turkey is stopping oil not under Russian sanctions, and that is raising global energy market supply concerns. As energy supply concerns increase, this is going to cause the price of energy, including oil, to start to rise. That in turn is going to cause inflation to start to rise once again, which is just going to kickstart the entire inflation worries we've had all year into 2023, which means even if the Fed does slow down the rate of rate increases at the December meeting, they might have to increase them again next year. So whatever relief we get when the Fed meets next week might be short-lived. And the major news that's coming out on Friday that could move the market significantly are two economic reports. The first one being the November PPI, or Producer Price Index, which measure prices that suppliers charge to businesses and other customers. The PPI, or Producer Price Index numbers, eventually make their way to the CPI, or Consumer Price Index numbers, because the more suppliers have to pay for the goods that they produce, the more they have to charge consumers to actually buy those goods. Now, if the PPI comes in higher than expected, that means future CPI numbers will probably be higher than expected as well. But if the PPI numbers come in lower than expected, then there's a chance that future CPI numbers might come in low as well. The only thing about CPI is there are a few factors that do not directly get impacted by supply, and those include things like oil and energy, food, as well as rent. And this, even if the PPI is low, it doesn't guarantee CPI will be low. But if the PPI is high, that's a really good indicator that CPI will be high. The other major news that comes out on Friday is the Consumer Sentiment Index for December. The Fed uses consumer sentiment and the consumer's future projection of inflation in order to determine how much to raise interest rates by, because the Fed wants to manage expectations. So if expectations for inflation are high, then the Fed might be more inclined to raise interest rates a little bit more. And if the consumer sentiment or consumer expectations for inflation, if they come in lower than expected, then the Fed might be more inclined to do lower interest rate hikes in the future. And make sure your portfolio is ready for the Fed meeting next week. The Fed meets on Tuesday and Wednesday next week. The CPI, or Consumer Price Index, comes out on Tuesday, December 13th. And then the Fed announces how much they're raising interest rates by on Wednesday, December 14th. Futures markets are currently pricing in a 76% chance of a 50 basis point rate hike and a 24% chance of a 75 basis point rate hike. The last time Jerome Powell spoke, he indicated that the Fed would do a 50 basis point rate hike on Wednesday. However, the PPI numbers and consumer sentiment numbers coming out on Friday, combined with the CPI numbers coming out on Tuesday, could change that. So it's going to be very important for us to listen to news networks such as CNBC, because even though the Fed is under a blackout period currently where they're not allowed to speak to the press, they will leak the actual amount that they're going to raise interest rates by so that the market is not surprised. So especially on Tuesday, make sure you're listening to CNBC for any leaks that the Fed might raise interest rates by 75 basis points instead of the 50 basis points that's currently priced in. If this video helped you get prepared for trading in the markets this week, then be a good friend and share this video with your friends and family so that they can get prepared also. And make sure you hit the like button and subscribe. And if you want more market news like this, then make sure you watch the last video that I uploaded here.